Google reported their Q3 earnings after the bell, and shares are down nearly 6.5% in the after hours. Google has now finally broken through a 1-year long support, and we'll see why shares are being punished in the after hours. As always, if you're new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. Shares of Google year to date are up nearly 56% and have enjoyed a nice 36% gain over the past 1 year, but shares are now down nearly 6.5% in the after hours, even though Google posted a beat on both the top line and bottom line. So revenues coming in at $76.7 billion. The street was closer to $75.9 billion in their estimate. So a nice nearly $700 million beat on that top line. On the bottom line, EPS by beating by nearly 10 cents, as Google reported EPS of $1.55 and the street was closer to $1.45. So although Google beat on both the top and bottom line, why are shares selling off? We'll take a look into that shortly. But total Google services revenues coming in at $67.9 billion. That is up from a year ago when it was closer to $61.3 billion. Now these Google services includes ads on Google search, includes Android, Chrome hardware, and of course the platform that you're watching this video on, YouTube revenues. And so those were up nicely, nearly $6.5 billion year over year. Now the all important Google Cloud revenues did grow at nearly 22%, bringing revenues up to $8.4 billion. A year ago, we were at just $6.8 billion. So Google Cloud revenues did grow nicely there. We'll take a look into their operating margins and their growth rates in just a second. But other bets also over at Google growing nicely, nearly 50%, but this is a much smaller revenue segment for Google at nearly just $300 million. And then other losses coming in at $1 million compared to a gain last year of nearly $600 million. And so that brings our total revenues at nearly $76.6 billion. That was up 11% year over year. Now on the operating side, Google services operating income did jump nearly $5 billion. So that is very strong growth on that operating income side. You see nearly $6.5 billion revenue growth on Google services, and over $5 billion of that translated down to their operating incomes. Now Google Cloud last year was losing $440 million in this quarter. Same time now it's gaining $266 million. And so Google Cloud over the past, I think, 2 quarters has become profitable. And so that is a big deal for investors. Finally, Google Cloud turning profitable. Still a very low margin business if you consider on just $8.4 billion worth of revenues, they were generating close to $200 million of operating income. So certainly Google Cloud still on an operating income side has very little operating margins, but it did turn profitable, which is what investors can hope for. Now on the other bets, Google is still losing a ton, and I mean a ton of money. On $300 million of revenue of other bets, Google lost nearly $1.1 billion. Yeah, that's right, $1.1 billion worth of an operating loss on their other bets. A year ago, they were losing basically the same amount of money. On $200 million of revenue, they had lost $1.2 billion worth of operating losses. And so other bets over at Google clearly aren't working out. Now, I know their other bets include a combination of the sale of health technology and internet services. So obviously not the core over at Google, and they do like to experiment in the segment. And certainly if some things good come out of this over time, it can be a important piece for Google, but in the moment they are losing a ton of money on their other bets. And then if you take a look at operating losses from corporate costs, we come down here and see for corporate costs, Google associated these to not the reductions in workforce and office space. Those are not counted as corporate costs. It's instead looking at legal costs, including certain fines and settlements over at Google. And so you see over a year, this has increased substantially, as Google has probably been targeted by lawmakers over in Washington a tad bit more over the past 1 year. Now, looking at Google Cloud, yeah, the big reason for this sell-off is Google Cloud revenues did miss expectations, as estimates on Wall Street for the cloud computing segment were closer to $8.62 billion. Google Cloud posted revenues of $8.41 billion, and so nearly a $200 million miss on Google Cloud revenues. And the other big thing is that cloud revenues rose just 22.5%, and over the past few quarters, they've been closer to 28%. And so here we take a look at the revenue growth over at Google Cloud. And basically from Q2 of 2021, this has steadily been decreasing. Now, keep in mind, this is not revenues over at Google Cloud. This is revenue growth over at Google Cloud. And so expectations for Google Cloud are certainly very high. Investors want to see increased growth over at their cloud segment, especially considering how important AI is over at Google. And so seeing this decline quarter over quarter for cloud growth over at Google is certainly disappointing for investors. Now, taking a look at their ad revenue growth, this has certainly rebounded nicely over the past 4 quarters. You see it has steadily increased, nearing 10% in this most recent quarter. Now, it's nowhere near the growth we once saw during the pandemic, but I think that is expected now. I think the most bullish thing out of this chart is probably for another company, another FANG stock, namely Meta, considering how strong advertising has been for Google in this most recent quarter. Yeah, Meta posting results tomorrow should likely benefit from this result. Moving on to the statement of income over at Google, which in my opinion over the last 3 months was absolutely fantastic, as they posted revenues of nearly $76.7 billion. That was good for 11% growth year over year. Now on the cost and expenses side, this is where Google really shines, as they did a good job controlling costs. As you see, cost of revenues was up just $2 billion. So on nearly $6.5 billion more of revenue, they spent just $2 more billion on the cost of those revenues. And then R&D was up just $1 billion, up to $11.2 billion. You see sales and marketing, Google actually was able to tick that down year over year, down to $6.8 billion. And then general and administrative was up fractionally as well, up to $3.9 billion. And so you come down to your income from operations of nearly $21.3 billion. Same time last year, we were sitting at just $17.1 billion. And so if you take the operating margins, those also expanded over at Google, as if you take 17 divided by 69, that would lead to operating margins of close to 25%. But now we are sitting closer to 28.5% of operating margins. So those expanding over at Google, certainly a good thing to see. You get to pay some income taxes and you come down to a net income figure of nearly $19.7 billion. Same time last year, we were sitting at just $13.9 billion. And so you see Google adding close to $6.5 billion in revenues, and about $5.5 of those $1 billion flow all the way down to their net income. So Google doing a fantastic job right here in the middle, controlling those costs and expenses to bring down those revenues straight down to their bottom line. On a 9-month basis, this paints really a fantastic picture as well, as you see revenues are up to $221 billion, and then net income coming in at $53 billion for 9 months. That is absolutely stellar. If you take a look at it from a big picture, there's not many companies that are doing $53 billion worth of net income in just 9 months. Now their EPS over the last 3 months coming in at $1.55. That is up from $1.06 same time last year. And then you see number of shares outstanding have steadily been decreasing, down from 13 billion same time last year down to 12.5 billion. So Google doing a ton of share buybacks. Moving on to the balance sheet over at Google, which in my opinion is frankly one of the best over on Wall Street. You see total current assets at nearly $176 billion, and they have total current liabilities at just $86 billion. So a current ratio well over 2. In fact, their total liabilities are at just $123.5 billion. So Google, if they wanted to, tomorrow they could pay off all of their liabilities based on just their current assets. So Google looking very strong from a balance sheet perspective. They are sitting on a ton of cash, nearly $31 billion of just cash and cash equivalents. And so Google certainly having the room to continue to invest in themselves, continue to invest heavily in AI, and continue to do share repurchases at the pace that they have been. Now, taking a look at their statement of cash flows, you see net income for this most recent quarter coming in at $19.6 billion. We get to add back some depreciation, amortization, a good amount of stock-based compensation over at Google, and we come down to operating cash flows of $30.6 billion over these last 3 months. And so let's see how Google uses those $30.6 billion. They use about $7 billion in investing activities as they purchase some property and equipment. These are probably the servers over at Google. Certainly those aren't cheap. And so they spent nearly $8 billion on that. They can't do a ton of acquisitions considering how much Google is in the eye of lawmakers. And so they don't have a ton to spend on acquisition, especially large acquisitions. And so instead, they repurchased nearly $15.7 billion worth of common stock in this most recent quarter. Same time last year, they also purchased nearly $15 billion of common stock. They also repaid nearly $1.4 billion worth of their debt, and so used up close to $18.3 billion in financing activities. And so Google using a ton of their free cash flow in the repurchase of stock and paying down debt, which in my opinion is probably a good use of their money, considering they probably can't go ahead and do a whole lot of big acquisitions. Now, speaking of stock buybacks, yeah, Google, I'm sure, would love to buy back their own stock now that it's 6.5% cheaper. As you see in the after hours, shares are closer to $131 per share. I have this 1 year chart over at Google, and this uptrend is finally broken through with probably a big red candle or a gap down tomorrow. And we'll see where shares open up and close tomorrow during the trade. But right now I'm seeing Google trade close to a level of support I want to call near $129 per share. Certainly this is a level where Google has been rejected back in June of this year and then has acted as a support as recent as September. And so in my opinion, I wouldn't be surprised if Google continues to sort of consolidate and trade sideways in this range between $130 to $140 per share, really until the end of the year. And so if Google does come down to levels of close to $116 per share, in my opinion, that is where I would personally look to add to my position in Google. Certainly if you are long Google and you don't maybe have any exposure to the advertising space and want to get into shares of either Google or Meta, I think a 6.5% reaction is sort of an overreaction to these results. And so I wouldn't blame you if you come in here, maybe buy 1 or 2 shares of Google, especially if you are underweight FANG. Certainly, I don't think the stock is overly expensive, but I do think closer to $116 per share, that is where Google, in my opinion, would be a much better deal. And considering that it has broken through this 1 year long uptrending support, and the sentiment over at Google, considering their cloud revenue has slowed down, yeah, the sentiment over at Google is quite negative at the moment. And so I wouldn't be surprised if it does come down to these levels. But again, if you are underweight FANG, if you are underweight the advertising space in general, I wouldn't mind coming in here and beginning to allocate a position over at Google. Certainly, I do think from a long-term perspective, this is a fantastic stock and one that can be a cornerstone in your portfolios. That was my take on Google. Frankly, a fantastic quarter, and in my opinion, the market is overreacting to the slowdown in their cloud segment. And so from a long-term perspective, I think this is still an easy buy and hold, and I think even this dip can be bought from a long-term perspective. Let me know what you guys think of Google in the comment section below. Are you coming here and buying shares at close to $130 per share? Let me know your thoughts. As always, thanks so much for listening. Stay tuned on the channel. We'll cover earnings for Microsoft, Visa. We'll take a look at Meta and Amazon later in the week. As always, thanks so much for listening, and I'll see you guys in the next video.